I ranked 55 of the best ETFs to buy and hold forever. What's up everybody? There's so many ETFs out there in the stock market. Good ones, bad ones, ones that will make you a ton of money, and ones that probably won't. I made a list of 55 ETFs either from comments you guys posted not too long ago, and it also went to a website called Veda FI to do some more research and filter for the largest ETFs by assets under management. Now, the ETFs that made this ranking list are going to be ETFs that for one, you can definitely buy and hold forever. So no bonds in this one because bonds are for lower risk investors who want to preserve their capital and to have some income versus us long-term investors. We want capital appreciation and growth for our retirement goals and our future for investing. So long-term investors will stick to stocks and not bonds. Number two is the ETF must have a track record of returns for at least the last 3 to 5 years. I know that there's so many ETFs that are amazing that just came out over the past couple of years, but I want all the ETFs in this video to have gone through at least a bull market and a bear market so you could get a feel of how the ETF performed over different time periods in the stock market, and most of the ETFs in this video have around a decade or more of performance. Moving on to how I'm going to score and rank all these ETFs. Now, no ETF is perfect. Please remember to do your own research and your own due diligence because each ETF should reflect your own risk tolerance, your time horizon, and your goals, and know that past performance does not indicate future results. So my way of ranking all these ETFs is going to be based off of their own categories. So in this video, we have dividend ETFs, dividend growth ETFs, covered call ETFs, S&P 500 ETFs, broad market ETFs, Reits, gold, small caps, growth ETFs, technology ETFs, everything you could think of is all in this video. International ETFs, we have it all, and how I'm going to rank them is going to be based on my own personal preference because I'm the ETF ranker here and your host. But please know I'll keep in mind things like diversification, expense ratio, dividend yield, dividend growth, and finally total returns from the last 5 and 10 years. Now this all leads to the final ETFs ranking, which will either land it in a few different categories, either the best tier, which is the best ETF or type of ETF to buy and hold forever, good tier, average tier, med tier, and then worst tier. So please avoid the ones in the med and worst tier because there's going to be better options to choose from. You'll see in this final ranking for this video. Now, all of my research was done with the help of Seeking Alpha, literally one of the best ETF investing tools I use for every single video to research ETFs. Seeking Alpha literally has everything from whether an ETF is a buy, hold, or a sell. It shows you the holdings, the risk, the expense ratio, the dividend yield, the growth, and everything you can think of all in one place for the best ETF analyzer. So check out Seeking Alpha, it'll be in the top link in the description of this video. Now, if you haven't already, please check out the Blossom app and download it in the link in the description of this video. It's literally a free investing app. Yes, I said a free investing app because on this app, you can see my entire ETF portfolio. Whenever I buy ETFs, you can see my changes in my portfolio. You can ask me questions on there. Now, about 700 of you have downloaded Blossom, so thank you guys so much. I invest around $5,000 per month on a weekly basis into my ETF portfolio. So check out Blossom, I'll see you there. Now let's get started ranking all these ETFs. Now the first funds I'm going to start ranking are going to be S&P 500 ETFs or funds. Now all these funds are going to be very similar because they all track the same index, that being the S&P 500 index. Now the biggest difference is going to be their share price and the expense ratio, but since most, if not all brokerage apps allow fractional shares, the biggest difference here is going to be the expense ratio. ETFs like VU, IVV, and SPLG are 3 of the most popular S&P 500 ETFs. They're followed by SPY and VFV, even FXAX, VFIX, and SWPPX slide in there even though they are mutual funds. Now I know a lot of you guys love your mutual funds, so I replaced your mutual fund with an ETF, so there will be 55 ETFs ranked in this video, so I love you guys. All of these funds have excellent diversification, being they hold a well-rounded basket of stocks, around 500 different companies from all types of sectors from the stock market. Their dividend yields are also going to be very similar at around 1.2%, and they also have some great dividend growth. Of course, all of these funds have strong and stable returns. The S&P 500 is probably the most reliable index there is from its 10.5% annual return since 1957, which is impressive. The biggest difference in all these funds is going to be their expense ratio. Now, all of them are super low, but two ETFs that stand out to me are going to have a higher expense ratio, which are going to be SPY and VFE. Both of them are at 0.09%, while the rest of their group is going to be way lower than that at a way lower expense ratio. However, SPY and VFE do have a place in somebody's portfolio or their strategy. So if you're going to invest in SPY, that's more meant for traders, while VFE is meant for long-term Canadian investors. So if you're still buying SPY and you're a long-term investor, you're really missing out because SPY is meant for traders and you're going to have a way higher fee and an overall higher cost to invest in the S&P 500 than other ETFs if you were to invest in them. So with all that in mind, I'm going to give all of these ETFs and mutual funds a best tier ranking, while SPY will get just a good tier ranking as some of the best and good ETFs to buy and hold forever. The second category of ETFs are going to be total market ETFs, either from the United States or world perspective. The ETFs that are total stock market ETFs or US stocks only are going to be ETFs like VTI, ITOT, SCHB, with FCROX being a mutual fund. All of these funds have great diversification, being that they hold large cap, mid cap, and small cap companies with thousands of different holdings from so many sectors of the stock market. Their dividend yields are also going to be very similar at around 1.2%. They all have dividend growth in these funds, and they also have very strong returns. The USA has been on a tear since practically forever, and with VTI being the most popular of the bunch, I'm going to use this one for the returns category. These funds have returned over 12% every single year over the last decade. The biggest difference from all these funds is going to be their expense ratio as well. Now they're all going to be super low, but ones that jump out at me are practically none of them because they all pay very low fees for all of these funds. So with that, all four of these funds will get a best tier ranking as some of the best funds to buy and hold forever. Now on the other hand, we also have total world ETFs, which have US stocks and even international stock exposure. Two of my favorites are VT for Americans and XEQT for Canadians. Diversification is the best with all of these ETFs since you have large cap, mid cap, and even small cap companies, but from around the world. And you also have literally tens of thousands of stocks in these ETFs. The dividends are going to be a little bit higher since international companies generally pay a higher dividend. Now the expense ratio is going to be very low for VT at around 0.06%, while XEQT has a higher expense ratio of 0.2% for Canadians. The returns are very similar and very good in my opinion, of over 12% over the last 5 and 10 years depending on the fund you choose. I'm going to keep the ETF rankings for these ETFs very simple. Both are going to get a best tier ranking. Up next, we have Nasdaq-100 ETFs. Now, three great choices are going to be either QQQ, QQQM, or QQC, where QQC is meant for Canadians, while the other two ETFs are meant for Americans. All of these ETFs have roughly 100 different companies, technology being the highest weighting sector, but they also have other sectors for the extra benefit of diversification. Now, the dividends are in the strong suit for these ETFs because they're mostly considered technology or a growth ETF. And the Nasdaq-100 has boasted around 20% returns every single year over the last 5 years, and just shy of that over the last decade, which has easily beaten the likes of the famous and world-renowned S&P 500 index. For Americans, the cheapest option is to go with QQQM since it has the lower expense ratio of 0.15% versus the most expensive expense ratio of the QQQ at 0.2%. And for Canadians, just go with QQC. So with that, I'm going to give QQQM and QQC a best tier ranking, while QQQ will just get a good tier ranking. Up next is traditional dividend ETFs, or more specifically, dividend growth ETFs. SCHD is up first with a broad basket of 100 high quality dividend paying companies. The expense ratio is also very low at just 0.06%. The dividend growth has been insane over the last decade, and the returns have been great of over 11% over the last 5 and even the last decade. Now, SCHD is easily regarded as one of the best ETFs you can buy and hold forever, and it will receive a best tier ranking. DGRO is up next with over 400 different dividend growth companies, so it's quite diversified. The expense ratio is also low at just 0.08%, and the dividend yield is over 2% with strong dividend growth as well. The returns are also very impressive of over double digits in the last 5 and even 10 years annually. No hesitation, DGRO definitely gets a best tier ranking as well. VIG is up next with an ETF that has over 300 different companies that aim to grow their dividend over time. The expense ratio is low at just 0.05%, and the dividend yield is also on the lower side of things of around 1.6%, but it's okay because it has strong dividend growth over the last decade and it's great. And lastly, the performance is also very good at over 11% returns annually over the last decade and over 14% returns annually over the last 5 years. Now, VIG is definitely a great ETF to have in your portfolio, so it definitely deserves a best tier ranking. Next up is FDVV by Fidelity. This ETF has over 100 different high quality dividend paying companies. The expense ratio is pretty low at 0.16%, so it's not the best we've seen, but it's definitely not the worst in this category. The dividend yield though is up there at just under 3%, and the dividend growth has also been okay, but not the best from its peers. However, this fund makes up for all of this by having some great returns of over 13% annual returns over the last decade and in the green in nearly all of its time frames. FDVV is definitely a sleeper and underrated ETF in my opinion. So with all that, I'm going to give it a best tier ranking among some of the best ETFs in the game. DGRW is definitely more of an underappreciated and a sleeper dividend ETF. This ETF has a broad basket of around 300 high quality, large cap dividend paying companies. The dividends have been not the best and the dividend growth is not the greatest either, and the dividend yield is around 1.5%, and it does pay its dividends on the flip side though, every single month, which is pretty cool to see. The expense ratio is kind of high at 0.28%, but that's okay because it pays its dividend every single month like I said before. The returns though have been great at around 13 to 14% annually over the last 5 and 10 years. DGRW is definitely an ETF if you want monthly dividends and some good capital appreciation, so this ETF will definitely get a best tier ranking. SPHD is up next, a high dividend, low volatility ETF with over 50 different companies, mostly in the real estate sector. The dividend yield is on the higher end of over 3%, where the expense ratio is also up there at 0.3% as well. However, this ETF also pays its dividend every single month, so it does give monthly dividends. The dividend growth hasn't been the best either, but that's okay because it does pay its dividends every single month and it has over a 3% dividend yield. The returns have been the lowest so far of this category, of around 7% annually over the last 5 years and over 8% per year from the last decade. In my opinion, there's definitely other ETFs in this category that can give it better dividend yield, some more growth, or just overall better returns in the long run if we're going to be buying ETFs forever. So this ETF will get an average tier ranking. VYM is the last ETF in this category. It has over 500 different companies that have high dividend yields. The expense ratio is also low at 0.06%, and the dividend yield is also very solid at over 2.5% with some reliable dividend growth. Lastly, the returns have been pretty good of over 10% annually over the last decade and over 13% returns annually over the last 5 years. VYM is definitely a sleeper ETF and is definitely deserving of a best tier ranking as some of the best ETFs in the dividend category business. Up next is growth ETFs, and boys, there are a lot to cover. All of these ETFs have one goal: to make you as much money as possible and as fast as possible from growth stocks. For this category, I'm not going to mention the dividend yield, the dividend growth, or even the dividends at all, because growth ETFs hardly pay a dividend or have even that much of a dividend at all. Up first is VUG and SCHG, both large cap growth ETFs. Both of these funds have a few hundred stocks from a well-diversified basket of large cap companies. The expense ratios are exactly the same at 0.04%. The returns have been very strong, favoring SCHG more than VUG, but they're still very similar at just under 20% over the last 5 and even 10 years. So this one's a no-brainer that both VUG and SCHG get a best tier ranking. FSPGX is a mutual fund that is also in the large cap growth category. It's a well-diversified basket of stocks in this fund, a very low expense ratio, and solid returns to back it up. So this mutual fund also joins those two ETFs in the best tier ranking. Coming up is VGT, XOK, and FTech. All these funds have a solid amount of only technology stocks. The expense ratios are low, where VGT has an expense ratio of 0.09%, where XOK and FTech has an expense ratio of 0.08%. The returns for all of these funds have been amazing, at roughly 20% for all three ETFs over the last decade and even in the last 5 years. All in all, these are very solid choices for technology-focused ETFs and definitely deserve a best tier ranking for some of the best tech ETFs you can buy and hold forever. Moving on, we have VONG, MGK, VOOG, and SPYG. All of them are mainly large cap growth ETFs, and all of them have a few hundred different holdings from many different sectors of the stock market. All of the expense ratios are low with no red flags in this category. Performance has been very similar for all of these funds, but is favoring MGK and VONG, but not the S&P 500 growth ETFs of VOOG and SPYG. With all that in mind, all four of these ETFs are great choices for some large cap growth ETFs and definitely deserve a best tier ranking. COWS ETF, definitely a very interesting name. In this ETF, you have a broad basket of roughly 100 different companies, all based on free cash flow yield. The expense ratio is up there at 0.49%. The returns have been good, but there's been definitely better alternatives in this space with a lot lower expense ratio to their name. Now, I'm going to give COWS ETF a good tier ranking because there's definitely other better alternatives in this category space for growth ETFs if you are a growth investor. MO is the next ETF, where this ETF has around 50 different companies, so it's kind of diversified but not the best we've seen. The expense ratio is also on the higher side at 0.47%, and the returns are around 13 to 14% annually over the last decade. Now, you could definitely save a ton of money just from having a way lower expense ratio, so this ETF just gets a good tier ranking because there's definitely other alternatives in this space. Next up is SPMO and MTUM, both momentum-based large cap ETFs. Both have roughly 100 different stocks from a broad range of sectors in the stock market. The expense ratios aren't too bad at 0.13% for SPMO and 0.15% for MTUM. SPMO has the better returns at just under 20% annually over the last 5 years and over 16% annually from the last decade, while MTUM is way below SPMO in terms of its total annual returns. Overall, SPMO is definitely a better momentum-based ETF than MTUM from an expense ratio perspective, performance, and just the overall quality of the ETF, so I'm going to give SPMO a best tier ranking and MTUM just a good tier ranking. QGRW is up next. This ETF has exactly 100 different high-quality growth companies. The expense ratio is okay at 0.28%. This ETF is more of a newer fund, but the returns have been able to keep up with other great ETFs in the growth ETF category. The expense ratio could definitely be lower to match other ETFs in this category, and the returns haven't been for so long than other ETFs in this category as well, so I'm going to give QGRW a good tier ranking as well. The next category is Semiconductor ETFs. Two of the most popular are SOXX and SMH, both having a handful of companies, around 20 to 30 different companies in the semiconductor sector. The expense ratios are going to be exactly the same at 0.35% for both ETFs. The returns, though, do favor SMH than SOXX at nearly 30% annual returns over the last decade. Overall, in my opinion, I do like SMH way more than SOXX, so with that, I'm going to give SMH a best tier ranking and SOXX just a good tier ranking. Up next is a small cap ETF category, and the first ETF and only ETF on this list is AVUV. This ETF holds over 700 different companies. The expense ratio isn't too bad at 0.25%, and the dividend yield is also pretty good at 1.7% with some dividend growth as well. The returns always do the talking, and this small cap ETF is no slouch as it has done around 18% returns annually over the last 5 years. Now, I love a great high quality small cap ETF for diversification purposes, since most portfolios have only large cap companies. So this ETF will get a best tier ranking as one of the best ETFs to buy and hold forever. Moving on is our real estate ETFs or Reits, that of VNQ and SCHH. Both ETFs have well over 100 different real estate companies. SCHH has a lower expense ratio though at 0.07%, while VNQ has a higher expense ratio of 0.13%. On the bright side though, VNQ has a way higher dividend yield than SCHH, so it does make up for it in that category for more passive income. The returns in the stock market haven't even favored REITs over the last 5 years, but that's okay because VNQ has the better returns of these two ETFs of over 5% annually over the last 5 years and over the last 10 years as well. Now, REITs are my favorite investment in the stock market because personally, I'd rather own physical real estate than REITs because of the returns aren't going to be as one for one from real estate ETFs to an actual home or a property. So with that, I'm going to give these two REIT ETFs an average tier ranking to buy and hold forever. Next up, we have covered call high dividend ETFs. Starting off is some of the best in the business, that of JEPI, JEPQ, SPY-I, and QQQI. All of these funds have a well-diversified basket of stocks that provide both capital appreciation and income as well. JEPI and JEPQ have the lower expense ratios of the bunch of 0.35% for its expense ratio, while SPY-I and QQQI have the higher expense ratios of 0.68%. However, these ETFs have the higher dividend yield of well over 10%, but JEPI and JEPQ are still up there as well. All of these ETFs are relatively newer funds, but they still have performed very well considering both capital appreciation and the dividend yield as well. I like these ETFs for capital appreciation, but mostly for income generation. So if you're that type of investor that wants more dividends than growth in the future, these ETFs are the one for you. So these ETFs will definitely get a best tier ranking in this category. DEVO and QYLD are our last ETFs in this category. DEVO has the least amount of stocks in this category at just 34 holdings, while QYLD has the norm of over 100 different stocks. We have a pretty broad range of sectors in these ETFs. DEVO has a dividend yield of around 4.5%, while QYLD has triple that at over 12%. Both expense ratios are going to be kind of expensive, but you do get a very high dividend yield. QYLD's returns is around 7 to 8% annually over the last 5 and even 10 years, while DEVO's returns have been great at over 14% annually over the last 5 years and over 12% per year since 2016. QYLD is definitely a mid-tier ranking on this list because there's other better high dividend covered call ETFs like JEPI, JEPQ, SPY-I, QQQI, and so much more, and DEVO definitely gets a best tier ranking because it has everything you want, income and capital appreciation as well. Next up is Bitcoin, specifically IBIT or IBIT, which is a newer ETF that doesn't make at least the 3 to 5 year requirement or our criteria. But I know Bitcoin is definitely becoming more of an official asset and it's very popular, so I feel like I have to rank it for you guys. IBIT obviously provides investors with exposure to Bitcoin, and the expense ratio is 0.25% and there's no dividend at all. The returns are pretty good considering it's only been an inception in a bull market when Bitcoin has been going to the moon. So honestly, no one knows if Bitcoin's going to go up in the future, it's going to go down. It's a very volatile asset, so who really knows? It's super higher risk investment. And with that, I'm going to give IBIT a good tier ranking in the ETF category. Next, we have a gold ETF of GLD. The expense ratio is kind of high at 0.4% and it pays no dividend at all. The returns are pretty solid at over 11% annually over the last 5 years and over 8% annually over the last decade. Gold or GLD is definitely a good ETF, so it will get a good ETF ranking only because gold has underperformed stocks in the long term, so I want you guys to have the best possible returns in the long run. So if you want that, just have stocks and maybe keep gold as a smaller portion of your portfolio if you want gold. The last category is international ETFs. Yes, of course, the USA has outperformed international ETFs and companies, But who knows, maybe international stocks will have a comeback and a resurgence and overtake US stocks, so take that with a grain of salt. 3 ETFs I like are VXUX, VEA, and VWO. All 3 ETFs literally provide exposure to so many companies, literally thousands of different companies from around the world. All their expense ratios are low and their dividend yields are also pretty good at over 3%. Their returns are also really comparable at around 5 to 8% annually or every single year over the last 5 years and even over the last decade. However, developed markets are favored than emerging markets in the returns category. Personally, I do like developed markets more than emerging markets, only because developed markets have better economies and more mature economies and more regulation over their economies as well. So with that, I'm going to give VXUX and VEA a good tier ranking and VWO just a meh tier ranking. So there you have it, literally 55 ETFs and some mutual funds rank from best to worst as some of the best ETFs to literally buy and hold forever on this tier list. So congrats to all the ETFs that made the best tier ranking and all the ETF investors who hold some of the best ETFs literally in the stock market. For all the ETFs I might have missed in this video, comment down below and subscribe so I could get back to you. Comment your ETF and I'll literally rank it in the comment section, or maybe I'll make a future video of dividend ETFs, growth ETFs. I have a lot of ideas, so comment down below your ETF and I'll get to ranking them. I love you guys so much. Continue to crush in the stock market and take it easy. Peace.